All right, guys, what's going on, everybody? Paul Singh here, Bulls on Wall Street. Give me a little shout out as usual, where you're from and what you're drinking this morning. I got my usual Caribou coffee, one of my favorite coffees, from Minnesota when I was there for about 15 years. Let's see who's in here. Tom, what's going on? Kushal, how's it going? Louis, what's going on? We got a lot to talk about today. A lot happened this past week, as has been happening almost every week, it seems like. We've got Lance in here. What's going on, Lance? We've got this thing's moving really fast. I can't keep up with it. Tim from Chicago. What's going on? A lot of regulars in here. We got Devin. What's going up on from Wisconsin? Simon muted. I don't know what that means. Does that mean am I muted? Are you guys hearing me okay? I think I might be muted for some of you. I think that might be on your end because uh, okay, so it sounds like you guys are hearing me okay. All right, good, good. Ron, what's going on from Jacksonville? It's already lunchtime there, man. I just woke up a little while ago. You can still hear it in my voice. I had a fun but rough night last night. Richard, what's going on from Jersey? Uh, let's see. We have Garrett. What's going on? We've got Alex drinking the dark. Lavazza. I like Lavazza a lot. Um, Let's see here. Okay, we've got Tom Carolyn. What's going on from Dallas? We got Timothy in here. Got a big crowd today. We've got Richard. What's going on? Terry from North Carolina. We got Brian from Vegas, and okay, Simon. Okay, Simon. I think you're the only one, and you can't even hear me right now. But you're the only one who I think who doesn't have audio right now. It has to be on your end because it seems like everyone's hearing me okay. A-Rod, what's going on from Chicago? We got Sea Turtle from Seattle is drinking something, is not sure what. Uh, Drew is drinking the Starbucks Verona. We've got Guillermo, what's going on from Colombia? First international this morning. Usually we got a ton of them. Oh, wait. We got some Canadians as well here. We've got Drew's from Ontario. I should know that. Drew's been in here so many times. Ivan, what's going on? We've got Steve from Boston. All right. Okay. All right. So we got a lot to talk about today. There was a big Fed meeting. The market is in a precarious position, kind of an inflection point that might get resolved this week. We'll see. So obviously, we're going to be paying close attention to that. So let's take a look and get started. First of all, let's talk a little bit about what the Fed said. Now, usually, all we really care about is the price action, but we should know some of these headlines and a little bit of what's going on here. So we had the Fed release on Wednesday, and there was some good and bad, nothing too concerning. I think everything kind of was in line with what was expected. And that is from last meeting, they were holding, and they said basically they're going to continue to hold until something tells them not to anymore. But there was also the expectation of two rate cuts in the future by the end of the year. And the way they figured that out, they used this dot plot, and there's obviously there's Powell is the Fed head, but they have all these other Fed members, and they put there what they want in terms of the future in rate cuts. And that doesn't mean it's going to happen. It changes all the time, but that's what we're looking at for the future. And this is essentially that dot plot here, and it didn't change too much. There's still essentially the expectation of two more rate cuts. So the market liked that. What the market was really concerned about is, the concern has been how is the Fed going to react to the potential for inflation getting hit because of the tariffs, right? And they've mentioned Trump, they've mentioned tariffs, but they haven't given any big indication at this point. They just keep saying they'll be fluid, with that. So the market liked that. They didn't come in and say, okay, we're really concerned about this now, and the dot plot changed, and now they went from two to one rate cut, or maybe even talk about hiking. None of that. So the market liked that. So that's why we didn't slide down. But there were some concerning things in terms of the language. They did mention tariffs, and they mentioned it more than last time. And if you look at the language of their statement, there was sentence in there that changed, and they used the word uncertainty. And these words, they don't. It doesn't seem that big a deal, but when they make a change like that, it's significant in their thought process. So a number of people really latched into that word uncertainty, and tariffs and uncertainty. But at the end of the day, I think the market knows that we all know that they were considering this, but they didn't do anything, and they still said they're still basically saying two more rate cuts. So because of that, the market reacted pretty good. So that's where we are in terms of the reaction of the Fed. And the best thing now is this is over, except for every once in a while, some of the Fed members will speak at a meeting or something. On Friday, one of the Fed members spoke, and it was good. He actually said that he still sees rate cuts in line. So he didn't shake the market or anything. So we've got the Fed out of the way. That's good. That's kind of where the market was uncertain going into that. And what I always say, it's every Fed meeting, I say the same thing. It's not the initial reaction. You got to wait a few days. So, we're always cautious going into the Fed. And then, I'll take some positions here and there. This time I didn't. But um, usually it takes a few days for the market trend to play out after the Fed. So if we look at what happened in the market uh, this time, let me pull this thing out so you guys can see it better. You can see here, this was Fed Day right here, and it was a very good reaction. And if you looked at some of the message boards and stuff, people were excited and jumping in. But then look what has happened since. Not too concerning, but we didn't get that continuation. The hope would be, okay, we're remounting the 90 EMA, and now we get up over the 200-day moving average, and that just gets us right back on track. That didn't happen, and that's, to me, it wasn't a surprise. We always say we wait till that Monday or Tuesday after the Fed, where we really start to see the direction of the market start to play out. You get that initial reaction, you get some back and forth, you have the weekend, and then Monday, Tuesday, Wednesday, that's where we really see the trend going. So that's kind of where we are right now. We have, the good thing is we had the Fed out of the way. There was nothing earth shaking in it. Kind of held course with what we've been seeing. And now the question is, what is the market going to do? And of course, if there's any news events coming up, tariffs, geopolitical, whatever it is. But nothing has really changed in terms of our overall outlook on what's happening in terms of our technical analysis. And our technical analysis is basically right now, the market is very, very oversold, working that off right now. And the question is, does it go higher or does it go lower? And right now, we don't have an edge. And the spots where we have clear edges is one, if we get back up over the 200-day moving average, or if we break this low. And that's the edge to the downside. So that's what we're looking for right now in terms of the market. While it ranges back and forth in this range here, we're essentially edgeless, and we can take trades here and there, but there's no real bias in terms of should we be aggressively long, should we be aggressively short, should we be aggressive at all, should we be pulling back and just kind of watching a little bit. And it's part of what always makes a good swing trader is you're not always 100% in the market. There are times when you're all the way in cash. There's times when you are 25% in the market, 50% in the market, 75, 100. Sometimes you like the market so much you're in margin, and you might even go. So people who are willing to go in margin will go in margin because uh, they like what they see. So right now is a good time to be cautious. Say take some trades here and there, but I wouldn't make any big bets right now. And we kind of talked about it. I'll skip down here to the plan A, plan B. Actually, let's talk about what's going on in the market first fully. So we essentially have, and I went to that's last week's. Here's this week. We essentially had the Fed. Key support and resistance levels, that's pretty clear. We already talked about the 200-day moving average. The 9 EMA a little bit, but I think we're just ranging around the 9 EMA right now. But this is what we really want to see. In terms of resistance levels, for the market to get back on trend, one thing we want to do is price action to confirm that, and that is by clearing these resistance levels. We want to clear the 200-day moving average and then get into that moving average, what I always call the moving average sandwich. You can see that room here, and this is nice that we have some room to the next resistance that we could play around with. So once we clear here, we know we can take trades, and the market, and we know the market impacts our trades. A lot of stuff moves with the market. The market doesn't hit resistance until it gets up over the 50-day moving average. And there's some price action in here, but they're kind of aligned with where the moving averages are. So then we have the 50-day moving average, obviously, and after that we have this other kind of sandwich with the all-time high. So those are the three key levels to the upside. They're going to provide resistance if the market wants to go higher. And then a downside, if we start failing here at the 9 EMA and then break this low. And if we do that, we have an open gap down. These open gaps always are important at around 534. And then this low here, this kind of pivot low all the way down here. And that seems far away, but that's essentially the extent of this move here. Would be a similar move like that would take us to this level right here. So we're not making any predictions. We just know that's kind of where we are in terms of what the market could do with support and resistance levels. Now let's look at market breadth. One thing we want to do is compare the S&P 500 to IWM. S&P 500 is 500 of supposedly the biggest and the best stocks. IWM is small and mid caps. And we can see here, I actually like the action here. It has been showing relative weakness on the pullback, which was concerning. But recently, it's holding up well with SPY, maybe even a little better than SPY. It was a little surprising that after the Fed report, even though the market wasn't doing well, there were some small caps that were doing pretty good, especially in tech. So I think that's a good signal there short term right now. If we look at RSP here, kind of the same thing. RSP is actually holding up very well with the market. And again, for those of you who don't know, I see a lot of regulars in here. So I say this every time for you guys, but SPY, RSP, SPY is not equally weighted. RSP is. So every stock in the S&P 500 is 0.2% versus, in SPY, the top 10 holdings make up right now about 35% of SPY. So this gives us a better indication of what the broader 500 stocks are doing, and they're holding up well. So these are all good signals. T2108 is holding up. This is stocks above their 40-day moving averages, and it got very oversold, bounced. I like that it made a higher low here as well when it got really extended. So that's a good signal in terms of overall market strength, and it's holding up really well right now. So overall, we've got some decent market breadth signals. Nothing to say, okay, I can just jump in, but telling us that, okay, maybe we might be ready to make a move here at the 200-day moving average. I think the only thing that would shake that, so if I was a little biased, I would say I think we're going to get that 200-day moving average remount. The only thing that could shake that is some kind of big news event, which is very likely, and we're getting them all the time now. But something happens related to the wars, something happens related to tariffs. So those are the things that I think could change this. But for now, if it's pretty mild in terms of news events next week, I wouldn't be surprised to see a remount of the 200-day moving average. If you guys have any questions, let me know in the chat here. Let's go to our game planning. We kind of already alluded to it. Essentially, we have a plan A and a plan B, right? Plan A is the reversal, which we're kind of getting right now, and then taking out the moving averages. So this is where we start to get really aggressive, is if the market gets up over the 200-day moving average. And where we look to short more, and it depends on what your mentality is. If you don't like to short too much, just stay back and watch and wait for the next long opportunities to come in, whether they're oversold bounces or relative strength type stocks. Or you start shorting. And, it's always tough that first move down to find where the bounce is coming. So usually you kind of sit back and watch that, or you take some shots with the shorts. It's that secondary move if it's truly a kind of bearish market. And that's where we're at right now. So either we get back on trend, or if the market starts failing in here, that's where we can aggressively start shorting. And there's various ways to do it. You could do the indexes. You could just use the big techs as kind of a proxy to the indexes. Or you can find stocks that are just bearish stocks to short as well. So different ways to do that. But that's essentially what we're looking at. Plan A, plan B. My take is if there are no news events, which we can't really predict right now, but if there are no news events, I think we're going to hit plan A. But if there is something scary related to tariffs or anything else, then we get that secondary move down. Again, if you guys have any questions or anything you want to talk about, let me know. Devin took a hedging position in SQQQ against longs. So that's very good. I like that. We hedged as well with IWM because small caps were showing weakness. and I have not taken that off. Even though I'm kind of alluding to, I think my bias is a little bit towards the upside. I haven't taken the hedge off. So essentially, I'm short small caps right now, but I don't mind. And if the market gets up over the 200-day moving average, that's when I will take it off. And there's this tendency to say, "Oh, well, I lost on my hedge. So what? You may have lost on your hedge, but you're winning on the stocks that you're long, right? So that's a good thing, and especially if you're like more long than short, right? So your hedge is protecting you a little bit, but it's probably better if your longs went out, right? So you almost want to lose. You want to lose on your hedge because that tells you you're probably winning on the other positions that you have. So if we had to root for something, I'm rooting for the 200-day moving average remount, and then I lose on my hedge, but I win on the longs that I'm in right now. All right. Any silver and gold stock on your watch list? So with the silver and gold stocks, what I like to do is I generally don't trade the stocks. If there's a stock I really like, I would. And, I've got a big list of stocks here. I keep a bunch of different lists here, and I've got my metals and commodities list in here. There's a bunch of gold and silver stocks. But the easiest thing to do is play the leveraged ETFs because very few of the stocks in those industries are going to beat the leveraged ETFs. So here's pure gold here. And you can see here it's been on a huge run, starting to pull back a little bit right now. You can trade one of the leveraged ETFs here. There's a bunch of them. I think UGLD is one of them. That's 2 times. So you can see here, like GLD was down 0.8%. So UGLD will be down almost double that, 1.75%, a little more than double that. Now, that's down because it pulled back. If it was up, it would be double on the upside. So I like to use uh, the leveraged ETFs. And then for the gold miners, here's GDX. And then you can do junior gold miners as well. But here's gold miners, GDX down 1 point, and then you can use Nugget here, or there's a few of them. Nugget's one of them, or JNugs and the junior miners. You can use those as well. And I generally stick with those because there's very few stocks that are going to beat those when these areas are running. Okay. All right. That looks like the extent of the questions. If you guys have any more questions, just post them here in the chat. All right. So we've got our plan A and plan B. Now let's look at some stocks. We got a bunch of them here that I am interested in. And if we get the good signal next week, we'll be jumping into some of these, kind of preparing, getting ready, stocking the market, and waiting to see what the market's going to do. And from there, then, because we're in a very correlated market right now where a lot of stocks are moving in the direction of what the market's doing. So that's why we're paying so close attention here to the market starting to run, because that will really help a lot of these stocks. We have a bunch of really good stocks, and this point C here, strong earnings stocks that have pulled back really deep for no reason of their own. They're very good stocks, but and they had great earnings. The only reason they're pulling back is because of this market. All right. Before I get to that, you guys know there's the Bulls on Wall Street swing membership, which I run. You can join that at this link here. And then in April, I'm going to be teaching a swing class. Right now, I think it's $300 off. Here's the link. I'm going to put it in the chat. We've got some time here, and I'm going to do some webinars with lessons related to that. But you can join here right now. It's $300 off. This is to the swing service, but here is the swing class link here, and I think it's still $300 off. Regular $697, now $397. So if you guys want to join that, you can. Let's get back to it. Let's look at some stocks here. Let's go to China because throughout this market pullback, when we've seen what SPY is doing here, China has been very strong. So if we look at FXI, first look at SPY, you see the downtrend here. Now, if we look at FXI, we see the opposite, right? And this is all related to the tariffs. The market obviously is concerned with what could happen with us in terms of inflation and our prices because of the tariffs. But it actually kind of, some people will say it benefits some of these Chinese companies here, and that's why FXI has been on this big run. But look at the past 3 days. We've been waiting here. We've been saying it's a little extended here. we want to see a pullback, and we've had essentially a 4-day pullback here. And the question is, where does this pullback go to? So we're watching China stocks very closely. Does the pullback stop here and remount the 90 MA? Does it hit this open gap here? Does it come down to the 50-day moving average, which would correspond with this range in here? So we're watching very closely. If we see some strength, we'll start considering some of these China stocks. A few of our favorites here. One, you can just take again, the leveraged ETF, which is yen. And this is triple leverage. So you can see it's down 5.44% today because FXI was down 1.3%. But some of the stocks we like here, BABA, and BABA has still been showing relative strength. It's not pulling back as hard as China overall. But I would love to see this stock pull back to this range right here. This is basically the 2023 high. If it could pull back to that level and show strength, and that look at that, how that's also pretty much corresponding to where the 50-day moving average is. So it would be great. We can't make this happen, but if it did happen, if it pulled back here and showed strength in this range, that would be a fantastic place to enter. If it doesn't and it rebounds to 90 MA, we can enter there as well. But we're watching BABA very closely. SE has already pulled back to a key level. It's testing the 50-day moving average right now, and this has been a very strong stock. So we'll be watching this one closely. And then electric car maker XPEV has also been showing a lot of strength. You see the big gap up here, pull back now, and we'll see again. Does it pull back to this range here, or does it pull back a little deeper to the 50-day moving average? Does it remount the 90 MA? We'll be watching very closely. But these are three of my favorites right now for the China stocks. We've got a bunch of others we're watching here. There's a big list. Let's just randomly pick a few and see. I mean, not so random. PDD, I usually like here. This one has been range bound here. So near term, it hasn't done much, but if you pull this thing out, it's actually a very nice pattern in that it made its IPO high here, got crushed, has been on a strong trend, and now has been consolidating for a while. If it can break this range, I think it will make a big move to the top of the range. KWeb, which is internet ETF, also in a very interesting spot here, where if it breaks this range, it could really run. Louis is asking me to share my China list here. Let me see if I can share this list. I mean, I don't have the share button here. I'll just have to copy them. I'm going to put them in the chat here. From what I've been told is you guys can't copy and paste out of the chat. I'm not sure why, but here is the list here. All right, hopefully that helps. You got the list right here. Maybe you can take a screenshot of that in your chat. Okay. All right, so that's China stocks. Let's quickly look at big tech. Then what I'm really focused on is for trades right now. China, we're watching and waiting and kind of stalking. What does it do on the pullback? I really like it, but there might be some more pullback. I'm really interested in these stocks that had strong earnings and have pulled back really deep. Now let's quickly do a rundown of big tech. We're always watching these stocks and potentially trading them. Let's start with two of my favorites. One is Netflix. And you can see here, you can see how strong Netflix has been for quite some time. Every pullback has been an entry opportunity. We got the pullback here, and now every remount of the 50-day moving average is an entry opportunity as well. And we're getting that here. So I think Netflix is a stock that can be entered right now with good risk reward. If you place a stop, I know that the 960 sounds like a lot, but if you can get a big percentage gain, it doesn't matter, even if you can only buy like 5 or 10 shares. You can see here, you can place a stop here around 30 points. Your target would be 100 points. So a very good 3-to-1, and you could tighten that up and get even a 4-to-1 on this. So I like that setup here. Meta, this one is not as strong. It had been a relative strength leader, has pulled back here, but it's pulled back to a very strong level. I always like converging supports, and we have price action support and the 200-day moving average. And so far, it's holding this range in here. And then, you have a very easy target here at the 50-day moving average resistance level. So I like Meta here. I'm not a big fan of Google right now until it starts to show some strength. Same goes for Microsoft. Apple has pulled back really deep and is not doing much in terms of a good pattern either. Amazon is very interesting. Let me find Amazon here. Uh, very strong stock, as you can see here, really deep pullback with the market, and now looking to remount the 200-day moving average. If it can remount the 200-day moving average here to about, let's say it closes at around 201, 202 next week, I think that would be a very good entry. You could place a stopper around maybe 4 or 5 points, and then target 218, 219, let's say 218. So basically 17 points of reward on maybe 4 points of risk. So we're looking at least 4 to 1 on this trade. But I will only enter if it can remount the 200-day moving average. So I really like Amazon here if it does that. So essentially, the big techs I'm most interested in right now are Netflix, Amazon, and Meta, and staying away from Google, Apple for now, and the other one, which one is Microsoft. Of course, we forgot about Tesla and Nvidia. Really nothing to do with Tesla right now. There's no kind of pattern here. Maybe you could say it's beaten down and starting to show some strength, so you have a good risk reward, but probably want to see a little more strength there. And then Nvidia, really, again, not a great pattern either. Until the pattern starts to improve, I probably wouldn't do much with Nvidia as well. All right, so that's big tech and China stocks. If you guys have any stocks you want me to look at, post them in the chat right now. And then we'll pull up. I think I'll random. There's a lot of stocks to go through here. I'll random, and almost all of them have similar patterns. So we don't need to go through all of them. We'll go through a few. But the common theme with these is we have a stock that has been in a strong trend. You can see Roku here had been, so from August, had gone from 50 to 100, so 100% move. Had a good earnings reaction. Every one of these I've listed here had a strong earnings reaction and then has pulled back deep. So it's had all this good news, has been in a strong trend, but is essentially pulling back because of the market. Roku is one of them that I've identified as that. You can see here, very strong move after the pullback here. Watch for the remount of the 50-day moving average in Roku. PLTR, this is one we're in right now, Bulls on Wall Street. Usually I wait for the 50-day moving average remount. I like this one so much we gamed it and actually entered below the 50-day moving average, a couple of points below. And now it is remounting. It's essentially triggered the setup here. So if you're looking for one, PLTR is a good one. You can target maybe this open gap here or the top of the range. But this is another one. Again, strong trend, momentum stock, market leader, huge gap on earnings, pulled back with the market, and is now coming back and remounting the 50-day moving average. That's going to be a common theme with all of these. We'll just now that we know the setup, let's just quickly run down these, and you can pick your poison, which one you like. It almost doesn't matter here. APP, exactly same setup here. Huge momentum mover, big gap up on earnings, deep pullback with the market, and now looking to remount the 50-day moving average. And I think this is one you could kind of game as well, like PLTR. It's so strong. It has made a very nice move, remounted the 90 MA, and then we'll see what it does around the 50-day moving average. Dutch Brothers, same pattern here. You're seeing the same pattern over and over again. MNDY, a little more messy, but similar pattern. Hood, again, same pattern. You're seeing this pattern over and over with these kind of mid-cap momentum stocks that have been in strong trends and had strong earnings. Shopify here as well. Same thing. I think I have one more here. DraftKings. And DraftKings is not as tight of a pattern, but we see kind of the same thing here. Strong trend from here. Breakout on earnings, deep pullback, and now watch the 50-day moving average remount. All right. That's what I wanted to go over. Actually, I accidentally skipped key industries. Let's go over a few of these real quick, and then I'll get to you guys' stocks. I'm watching VEU very closely. There has been an inverse relationship recently between the US and the rest of the world. Essentially, everything that's gone to the US with tariffs and everything. We've had the deep pullback in the US market, but VEU, which is an ETF that's the entire world except US. So they essentially take US out of it. And notice here, while SPY has been doing this, the rest of the world has been doing this. But we have a 3-day pullback here. I'm not pulling this up to trade it. I'm almost using this as a breadth indicator. If SPY is or any of the big U.S. Market ETFs, if they're holding up or showing strength, and VEU, essentially the rest of the world, is pulling back, I think that's a good thing. That's telling us money is flowing back into the US, and maybe that hedging with the rest of the world is coming to an end. So watch this closely, like we do with our other market breadth clues. Again, this one is not to trade or any stocks in there or anything. It's just to get a clue for what's going on in the market. We already talked about it, FXI. Semiconductors essentially moving just like NVIDIA. ARC is very interesting here. This is a Kathy Woods ETF. I like to use it as an indication of really speculative small cap tech. And you can see here, it had been really coming on strong. If we pull this thing out, it had done fantastic. It was one of the leaders during the post-pandemic momentum run. And then it was one of the biggest losers when we had the bear market and that post-pandemic run was over. And